Traders at Axis Bank say they expect the fixed income market to trade cautiously owing to the reduced liquidity as the Central Bank of Nigeria continues its bi-weekly auction at the Treasury bills market. Tobechukwu Ikpe, team member, Treasury at Axis Bank, joins me to give a wrap on activities at the fixed income and FX market space. Tobechukwu, thank you for joining us. Before you give us a summary of how the market has traded so far this week, let's focus on today's trading. Bring us up to speed on what we're seeing trading at the, starting with the Treasury bills market. We know that the CBN has been mopping up aggressively, correct me if I'm wrong, but let's talk to us about how that is impacting on today's trading.
Okay, thank you for having me, Esther. So today at the fixed income markets, what we witness is a bit of interest, a bearish sentiment, people looking to sell down their positions with a view that rates will be going up, especially since the DMO increased the rate at the recent auction on the 1 year by 40 basis points to close at 7.2%, coming from 6.8% at the preceding auction. So the indication is that rates at the fixed income markets will continue to go up in the near term, given that the DMO has been overselling in conjunction with the federal government signing a supplementary borrowing of 983 billion naira about 6 weeks ago. So the borrowings from the government are expected to increase, which should translate to higher yields. So both at the NCB and the bond spaces, we've seen market participants continue to sell down in anticipation of these higher rates. There's a lot of activity on the liquid papers for the 2036 and 2050 maturities, where market participants are currently quoting 12.7 and 13.05 respectively. So we've seen rates inch up by an average of 15 basis points day on day. We expect these bearish sentiments in the bond market to persist as the players continue to react to the increase in Treasury bills instruments.
Well, help us understand the trend in the last 2 weeks of liquidity levels at the market and the CBN's mop-up activities.
Also, initially, about a couple of months ago, the CBN has slowed down their issuances of their open market operation bills, but recently they resumed with their weekly auctions for their OMO bills. This week, there was a OMO maturity of 119 billion into the system on Wednesday. The liquidity in the money market was a bit elevated, opening the week at 2 to 8 billion, but this was depleted during the week by the net NCB debit of 71 billion and OMO debit of 50 billion. So apart from the DMO's auction of Nigerian Treasury bills, the CBN also conducted their OMO auction, small up liquidity. They offered 50 billion during the week, and rates closed at 7%, 8.5%, and 10.1% on the 117, 194, and 341 day maturities respectively. So we've seen the CBN come into the market, although they maintained rates on the long end of their OMO bills at 10%. We've seen them recently restart with urgency, mopping up liquidity from the system.
Okay, let's move over to the FX markets where, according to your note, there is still persistent illiquidity seen at the INE window. And I know that the Naira has been relatively stable at both the INE and the NAFEX windows. Help us understand what the trend has been since Monday and if you think that this could persist into the new week.
Okay, so for a long time, since the pandemic started about over a year ago, we've seen persistent illiquidity in the INE markets. The rates have been trading currently over the past week at 411 levels. It closed yesterday at 411.67. However, market participants, both local corporate and foreign portfolio investors with USD demand looking to clear their matured and outstanding obligations, continue to bid for funds. The CBN has continued to try to provide funds to meet the demand. They've sustained their interventions for both retail players and foreign portfolio investors with their weekly interventions for the foreign portfolio investors and the retail players. So anyone that needs to buy funds for their valid obligations, they can approach any bank to buy funds for their personal travel allowance, medical fees, school fees to meet their obligations. But the demand continues to persist, and in the near term, we expect that CBN will continue to intervene. They currently have the capacity to continue to provide funds for all valid transactions that need funds. Their reserves is evident in the rising reserves has increased by approximately 500 million since the start of the month, $500 million that is, and the CBN's capacity is unquestioned at the current moment.